We will start to re-record. Perfect. So welcome everybody to the Financial Advisory Webinar Series for today. That is myself, Tanya Hilt, founder of Cloud Bookkeeping Services and Tanya's Bookkeepers Bootcamp. I'm not going to go through all of this. You can certainly pause and read through this if you want at any time after, if you're replaying, but just a couple of the recent highlights. I was actually awarded with the 2019 IPBC, which is for the those of you in the US, that's our Canadian Institute of Professional Bookkeepers of Canada. So I was awarded with the 2019 Professional Leader of the Year. Our Bookkeepers Bootcamp did qualify for CEC credits in 2018, and we are Global's Intuit Firm of the Future for 2018 and a Canadian runner-up for 2017. And we were one of Practice Ignition's top 50 women in accounting, or I was, I guess, for 2018. So there's just some of the recent accolades that I've got. And, you know, of course, thank you everybody out there, because it's a lot of that is, you know, from me continuing to give back, and I only give back because everybody still keeps coming. So if nobody showed up, I'd stop giving back. So thank you for keep coming and for helping to bring the industry forward. So this webinar has been submitted for CEC credits. There will be 2 polls that must be answered in order to qualify for the credits. The recording of the webinar will be emailed within 2 days, and certificates for the credits will be emailed within 2 weeks of us receiving the official approval. We have basically been almost like we've been kind of pre-approved, but the official go ahead, release it is not actually awarded until after the webinars happen, because just in case there was, you know, some that had to be rescheduled or scheduling issues, they didn't want to go ahead and just pre-approve the batch up front. So what happens is the committee does meet once a month to officially give it the stamp of approval. So once we get that back, we will get those emailed out. So I do know some of you are still waiting for ones, you know, from the last 4 weeks. Don't worry, I'm still on it. They're still on it. They just, again, only meet once a month. It's usually the end of the month. So, okay. And today we have Tally Street with us, and of course there's the schedule. So any of the past ones you can find on my website and on my YouTube channel, and of course on the Bookkeepers Corner Facebook page to replay them if you're new to the series. And of course there you can see the dates of the future ones. So today we've got Brian and Jim from Tally Street. So I will let you take over, Brian. Brian's going to be doing the main driving. I think you said Jim will be doing the main talking, right?
We'll trade off.
You'll trade off. Perfect. Yeah. Perfect. So that sounds good. And I think you guys actually submitted 3 polls, did you not?
We did.
I think it was 3 poll questions. So 2 of the 3 are required to be answered in order to receive your CEC credits. It doesn't matter which 2, as long as I've got 2 of the 3 recorded.
Perfect.
Perfect. So I will stop sharing my screen, and you can take over, Brian, and I will just mute myself. Oh, and then as well, while you're doing that, if there's any questions, please use the Q&A. It's a lot easier to track the progress on what's been answered and what hasn't been answered than the chat, because the chat, if there's a lot of questions, it can easily get lost in the chat. Q&A, we actually have a way of marking what we've answered, when we've answered, and then clearing it from the list. So please do that, and then we will, of course, either get to them if it's appropriate during the time, or you know, maybe, you know, wait till the end, or if it's something that might be coming up a little bit later, then it'll be answered at that point. Perfect. Okay, I will be quiet. You guys can take over now.
Great. Let me start sharing my screen. All right. Hopefully that's coming through and we're good to go.
Yep, we can see it perfect.
Great. So again, thanks everybody for joining. Jim and I are co-founders of Tally Street, and we'll give you, we're a relatively new company, so I won't be surprised if most of you haven't heard about us. So we'll give you an introduction to us, talk about our focus and how, you know, ways we think we're a little different and complementary to some of the other solutions that are out there. How we can be used as part of an advisory practice. And then we really want to get our hands dirty a little bit. So we'll jump into kind of an analytics workshop. We'll go through some examples of what we produce, and then we'll also produce some add-on analysis or some additional analysis on the fly. And then we can leave plenty of time for questions and answers towards the end. So please don't hesitate to start to queue those up. or if, as they come in during the presentation, we can always, interrupt to address them in the general flow. So really quickly, to give you an introduction to the two of us and really the inspiration behind Tally Street, what led to the creation of the company, was really a combination of two experiences that I've had. So more than 10 years ago, I co-founded a Boston company called Localytics, which is a software as a service, big data analytics company. We're probably on all of your phones because we get embedded into apps like ESPN and HBO and Visa. And our job is really to help those apps understand how their apps are used, the deep analytics into the usage of their apps. But also we used it to manage our own business. So we were a very data-focused team. Venture capital backed, so we had funding, we're able to spend a lot of time and resources on data. And then about 3.5 years ago, I did something really different and started a liquor distributor here in Boston, Massachusetts. The exact opposite kind of world, right? So small data, no data team, self-funded, not that many resources, very much a small business. And what I really learned from that experience, one of the things I really learned from that experience was that I was missing opportunities and making mistakes that I thought could be addressed with some of the software that I used to use. The problem was the software was, the ones I knew were too expensive, or they required too much human effort to kind of set them up and manage them. And I couldn't really find anything that seemed appropriate and well designed for small businesses. So that really that was the inspiration behind Tally Street. And then Jim and I have known each other for years, and our paths have crossed since then multiple times, also in small businesses. And I shared the idea with him, and he joined up too. And I'll hand off to him so he can introduce himself a little bit more, and then we'll move on to the next slides.
Great, thanks, Brian, and welcome everybody. Tanya, thank you so much for hosting Tally Street today. Just a brief background from myself. Again, my name is Jim Hall, and I come from a 25-year career in community banking in Colorado. Very much a focused business on business clients, small business clients, cash management tools. Obviously, lending is a big part of that. But the most important thing about lending is getting paid back. So you need to make sure your clients are successful and have the cash flow to pay you back. And after I retired from the bank about 7-8 years ago, I founded my own consulting firm called MBL Consultants, which stands for My Better Life. That's going to be a quiz question later, which is a finance-centric business coaching type practice where I'd work with lots of small businesses and their owners to help them try to analyze their cash flow, become create more value with a real-world focus on how they can be better business owners at the end of the day. Quite frankly, most of them don't have MBAs and aren't finance focused, and that was my role, is to help them uncover those types of things. So that was my background in the banking and consulting world with that financial focus on cash and sales. So we should go to our first. This is our first polling question, Tanya. I'm not sure how you want to introduce that to people. So, have your clients?
Okay.
So, you want me to read that? So,
Sure.
basically, the question we have is: have your clients suffered cash crunches because of accounts receivable collection problems? And yes, no, or you don't know. You want to go ahead and open the polls and go from there. Tanya, I'll let you drive that timing. I know you have to do certain things for your CE credits.
Perfect. Yep. So we've got 12 out of 15 answered so far. So 80% have already voted. So 13. So we're just waiting for 2 more. Again, just a reminder that you need to answer 2 of the 3 poll questions to be able to receive your CEC credits. So we'll give another 5 seconds. 4, 3, 2, 1. There we go. We'll end the polling and share the results. So 69% say yes, their clients have suffered cash crunches because of AR collections problem. 23% no, and 8% don't know.
Great. Great. Thank you, everybody, for polling. It's very interesting that, yes, at 69%, because one of the statistics I have is that 69% of small business owners have lost sleep because of cash flow concerns. Number
So you're bang on.
exactly with the national poll, the most recent one I've seen. So that is very, very true. And one of the main reasons for that is business owners, they talk about cash flow and things like that, and that's great. And they want to look at sales, but sales does not equal cash. I think a lot of business owners believe that sales equals cash, and it does not. Sales does not equal cash. That's a big myth that's out there. And for Tally Street, our focus is helping you, the advisor, the bookkeeper, and the business owner know your customers in order to grow sales and convert them to cash. Again, 69% of business owners have lost sleep because of these cash flow concerns. 61% struggle with cash flow. 32% who struggle with that cash flow can't pay themselves, vendors, or employees, or their loans back, creating a great deal of stress. And a couple of small business general statistics that are out there is that 50% of new businesses fail within their first 5 years, and 82% of them fail because of cash flow problems. So one of the things that the bookkeepers and the accounting professional community is in the ideal position to do is to educate, demonstrate, and help solve this mystery, if you will, of sales not equaling cash to the benefit of the small business owner. And one of the businesses that we work with is Jeff, who owns a brick paver contracting company, very successful, but a small business. He has a team of 13 people. We installed Tally Street to allow him to get insight into his data that he hadn't looked at it in a certain lens with a certain way before. And we immediately found that he had quite a bit of a mess in the way he did his invoices and how he tracked his payments. He had a $500 discrepancy in an invoice and payment not noticed that he didn't notice in his AR aging reports, simply because there was so much in there that he couldn't pull out this $500 discrepancy. And we were able to catch it for him, highlight it for him, and he immediately saved a write-off. He didn't have to write off that $500. And that's just one small example of how we work with small business owners and their advisors to create value for them. He also researched that error and noticed he had to look at his sales in a little different way. He also had his invoices, all were prepared, due on receipt, regardless of repayment terms. So everything that he issued was already past due all the time. And it kind of got lost in that shuffle. So one of the things that Tally Street does is allows you to see through that, see the forest for the trees, if you will, and be able to find things that are rising to the top of a potential problem or even a potential opportunity. And later on today, Brian will go through some of that data information and looking at our reports. And we want to work with the advisor community, the bookkeeping community, those financial professionals that are out there that are looking to move from being what we're calling a process advisory practice, which is asking the question, what are we doing? So instead of having this focus on your current setup, whether you're using QBO, QBD, or some other system, what type of reconciliation processes do you have? What do we got to clean up for tax season, et cetera? What efficiencies are in the marketplace? How can you use technology? All those are very important things and things that the bookkeeping community brings to their clients on a process advisory level. Tally Street wants to be that tool, that virtual advisor that allows those bookkeepers that want to take that next step, that want to level up, to what we're calling observational advisory, which asks that next level question, how are we doing? So we know what we're doing, but how are we doing? So it allows you to look at those data, get some insights into what that data is telling you, allow you to look at long-term trends, look at some behavior, look at your customers and how you're churning your customers, collections, and cash flow as well is a big, big part of that. So we want to be a part of that virtual analyst to work with the advisor to allow the business to get behind the story of their data. The data that the businesses have tells a story and provides insight. and that story matters. So we want to make sure that clients out there start seeing the bookkeeping and financial professionals not only stop seeing them as an expense to be managed, stop seeing them as an expense to minimize, but become that valuable asset, a valuable partner that allows them to see that story. We want those bookkeepers to add value to their business clients, and again, not just be an expense. We provide that business and the advisor enterprise level analytics to small and mid-market businesses that don't have teams to do that for them. Many of these business owners don't have MBAs. They don't have a financial background. A lot of them are excellent technicians in their field, but they wake up one day and they're in their mid-40s and have a business of $6 million and 40 employees and wonder how they got here. So it's time to get that additional support, and allows us to provide the advisor a way to justify higher pricing for their services than just the data entry reconciliation work that so many of us have done for so long. And obviously the folks that are on this call and are looking at this webinar, have an interest in finding out how to take that next step with their clients. So the next slide is our next polling question. So the question we have for folks is, do you offer or want to offer observational advisory services? Tammy, I'll let you take over from there. Or Tanya, sorry, what did I say? Sorry, Tanya.
Okay, sorry, just give me 1 second here. Polling 2. There we go.
There we
Sorry,
go.
technical difficulties.
So do you offer or want to offer observational advisory services? And the response is yes, no, or don't know. You haven't thought about it.
All right, so we've got 76% of people voted, so we're still waiting on a few more. Doesn't matter, there's no right or wrong answer. So just remember, 2 of the 3 questions must be asked in order to gain your CC credits. So we're just waiting on 1 more person. So we'll do a countdown. We'll give 5 more seconds. So 5, 4, 3, 2, 1. We will close the polling now and show the results. So 75% do want to offer observational advisory services, or either do offer or want to offer, and 25% are still on the fence, so they don't know. Probably because it's still new and they're not sure how to do this, which is hopefully what this series will take care of.
Yeah, I mean, that's what we're seeing as well. A lot of the bookkeepers and financial professionals that we talk to, they know that they feel like they need to do something, or they realize it's an important movement within the industry, and they're just not quite sure what steps to take next. We at Tally Street want to be that virtual analyst that will allow those advisors that want to take that next level up step to becoming more than just a process advisor, to really become that observational advisor, or even partner, if you will, with their businesses, to take that next step without having to create a whole new process, a whole new system, and developing a whole new set of skill that is great to have. But most bookkeepers aren't advisors, they're not coaches, but they're in the premier spot with that trusted relationship with that client to be able to take that next step. And at Tally Street, we are the virtual analyst, and we focus on the 2 things that business owners really love to talk about, which I've never met a business owner yet that doesn't like talking about their sales and what's happening with sales and how many new sales they have and their orders that they're processing and their production. They love talking about that. And they obviously need to talk about cash, and they care about cash. So we focus on orders and cash, giving the advisor that allows them to highlight the customer behavior and performance details that uncover the stories of the business owner's data. What is that story telling you? And letting the business owner understand that story, and letting them take their knowledge of their business and making those decisions about what to do about it. But the advisor's first step is to uncovering those stories and pointing out the data that the business owner is either too busy to notice, because all business owners are very, very busy. Business owners don't have the expertise or technical ability to take data from QuickBooks, put it into an spreadsheet, do a trend analysis. They don't have the expertise to do that, or they don't feel there's enough value to pay their CPA, bookkeeper, or whatever to do that kind of quote unquote busy work. We allow that to be done quickly, easily, routinely for marginal value, especially when you add on the time savings that we provide to the bookkeeper, advisor, and or the business client in doing those reports and doing that data work, along with giving the advisor the impetus and the information available to hand it to the client with our reports, and have a conversation at that higher level hourly rate or value added pricing that you've put out there for your advisory level services, to have those conversations. And we allow you to have an agenda, if you will, when you go into those meetings for something to talk about and gain insights and set some KPIs and growth goals around. So that's what we're trying to do. We also have another client, Jack, who owns a mid-sized manufacturing firm. Jack, he's looking to sell his business in a few years. He wants to retire. He was doing this work for 40 years now and wants to retire. He worked with his bookkeeper advisor, and they reviewed the data provided by Tally Street and noticed that there were some concerns around concentration risk and his churn or lack of repeat business growth in his model. He was bringing on quite a few new customers, but he also had quite a few customers that were no longer buying from him, and he needed to understand really why that was, because the business broker he was working with to price the company for sale noticed those concerns and said that's something that the buyers that are looking to purchase his company would probably want a discount from that valuation because of those risks. So he wanted to sell his company in a few more years, so he had a little bit of time and worked with his advisor, worked with Tally Street on the reports, and is working now to try and minimize those risks, understand those risks, and make some changes. So his advisor used Tally Street reports to uncover that story, uncover that issue, and the business owner, Jack, looked at, well, how do I want to change this? And the last time we talked to them, they were looking at focusing on their incentive plan and making sure that his sales team is rewarded, not just for new sales, but for repeat sales and keeping customers coming back to their business. And that's just another example of how Tally Street allows the stories to be uncovered and let the business owner and their advisor, bookkeeper, decide what actions to take and try to avoid any type of discount to maximize that price. Accounting professionals, we are in the ideal position to share these insights with small business owners. Again, most of them don't have an MBA or don't have a financial background of deep experience and expertise. Again, they're good technicians, but this stuff matters. The patterns and sales trends and customers' lifetime value and things like that we work with at Tally Street, it matters. This is real world impact to these business owners and the value of their company, the amount of time they spend on things that distract from their growth goals or distract from their strategic planning, which only they can do as the owner of that business. Nobody else on their team can do that. They need to be the ones that take that time. And we allow them to save the time on the reporting side to have those higher level conversations and thought around their direction, their growth, and where they want to go and what they want to become. So we want to focus with business owners to stop being random, making random decisions, and start being targeted using our reports and our virtual analyst insights at Tally Street to make those decisions more importantly, timely and on the right path for them. So we allow the advisors to work with Tally Street to do more with less. We have our reports branded with the advisor's logo so that you're put in the position of that trusted advisor, of the person that's bringing these insights and bringing these stories to the top of the heap so that the business owner can focus on that. We allow you to use our analysis at Tally Street to jumpstart your advisory work and the advisory value pricing that you want to bring to the market and how you want to do that with your clients. That's up to you. But we allow you to take that first step, take that first jump, and have these discussions with business owners. These are the discussions that business owners want to have or need to have at least. And this is their data. This isn't you saying something, that isn't true. It's like, here's the data. Here's what your data tells us. And as long as your data is accurate, which we believe that the financial reporting and QuickBooks is the record of truth, as we like to call it, if that's up to date and accurate, this is what the data says. And it's not us telling you the story, it's your data telling the story. We're just showing you what it is. The nice thing about Tally Street as well, from the advisor side, is that we don't have a dashboard. Unlike many of the other cash flow tools that are out there, there's quite a bit of work to go in to put in inputs, put in your budget, manage that. There's nothing to set up. There's nothing to manage. There's nothing to configure. You just click a link, takes 10 seconds. We get added as an app to your QuickBooks, and reports are generated from your data almost immediately. That's one of the differentiating factors between Tally Street and the other products that are out there.
So Jen, there's just a quick question that this would actually be a good time for it, is what accounting software products do you integrate with?
Currently, we integrate with QuickBooks Online, and we are, very, very shortly going to have QuickBooks Desktop and QuickBooks Enterprise set up. And Brian, I'll let you answer that, what our horizon is. I know you have a little bit better insight into the technology aspect of that.
Yeah, so as Jim said, we support QuickBooks Online, Desktop, and Enterprise this month. The next decisions will largely be based on kind of the feedback we get from bookkeepers and accountants and CFOs, but the short list includes the usual suspects of Xero, NetSuite as we look more towards the mid-market, and Microsoft Dynamics or Business Central.
Perfect, thank you. Now, have you looked at, I know because we've got a lot of Sage users still out there too, so have you looked at either Sage Desktop, if the desktop is available, or even the Sage Online for Business? I'm not sure what they call it, but I know that they're really starting to push their online services.
Yep, yeah, certainly there are a lot of Sage users out there. Those are on our list too. It'll be really driven by what our partners and the businesses that we're helping to support want. So if
for priority makes sense.
On Sage, we'll add that. Go ahead, sorry.
Right. I was just going to say, to prioritize that totally makes sense.
Yeah.
Perfect, thank you.
Yeah. And then I think we have our third and final polling question before we get into some of the extra details, or actually walk through kind of an analysis or workshop together. So before we jump into the reports, we wanted to learn, how much time do you spend each month now building reports for your client?
All right, so again, none under an hour, between 1 and 5 hours, or more than 5 hours. So again, just a reminder, 2 out of the 3 polls must be answered in order to qualify for your CEC credits. So we're at 82% right now, so just a couple left. All right, 2 more left. So we'll give another 5 seconds. Okay, so just 1 more person left. So we'll go 5, 4, 3, 2, 1. So we'll close the poll and share those results. So 13% don't spend any time. 38% is under an hour, 44% between 1 and 5 hours, and 6% is more than 5 hours. Wow, that's a lot of time being spent.
It's a lot of time, and I think one trend we see. You've probably heard Mark Andreessen said it. He's a venture capitalist, but it's been quoted in multiple kinds of press that software is eating the world, and it's not necessarily a bad thing. We can basically use software and technology to save ourselves time. So as Jim mentioned, tools can help do a lot of the work, especially the kind of repetitive work we don't really want to do anyway. Do it for us so we can focus on the high value activities. And that's of course what this entire, presentation and webinar and series are about doing. So speaking of which, what we want to do with the last half hour, not all of it, we'll save time for questions, but is actually to go through some of the analysis that we produce and really, I'll guide through kind of diagnosis of a problem. So this is, fake data, demo reports, but we can go through and kind of start at the very high level, kind of 30,000 foot level, and start reviewing a business. And then we'll start to dig into areas where we think there might be a more interesting story. And we'll go all the way down and explore them at a very detailed level. And you might find, you have a fit at different points along that journey, and we'll love to get your feedback. So let's switch to first presentation. Let's go with our weekly presentation. So this is an email we send out every week. So it's a quick, high-level weekly summary. And before we get into the details, I want to highlight a few things. So one, of course, is that these are branded reports. So your logo would go in the top right of this screen. The top left of the screen where it says Tally Street Demo would be the name of your client. So this is something that would be automatically produced every week and sent to the client. Powered by Tally Street, but promoting you and giving you the opportunity to automatically touch that client every week. Another thing to point out on this slide, and especially, is that we have some high-level summary information, but the content on the slide is pretty dynamic. So not only do the numbers change, but the messaging will change based on the results. So for example, here we're saying, congratulations, sales this week were up 175%. We want to be positive, supportive. We want to reinforce, businesses, your clients. So these messages are always positive. So we'll look for the good things in the data and highlight those, while then making all the data available to continue diving into the details. And you'll see the general structure is to focus on, again, sales orders and cash. So we start talking about and summarizing sales over the period, in this case, a week. And then we start to get into how the business has done collecting on those sales. So we start with a very high level summary of just how the business has been doing. So this is just monthly sales over the past 12 months. We also overlay the previous 12 months. So we're seeing 24 months on this chart. And in October, we're seeing progress in October because it's not closed yet, but how has the company done so far in October, and how are they reaching up towards what they had done in October the previous year? You'll see a lot of breakdowns, different ways to look at the data. So new versus repeat sales. Acquiring customers is expensive, and repeat customers can generate a lot of value over time as you avoid those acquisition costs, but as you drive sales and what we call expansion revenue, or just that extra growth from those repeat customers. So this is a common lens or view you'll see throughout the data. And in this case, we see that they've had pretty consistent repeat customer usage of around 30 per week. Last week was particularly good. So, something happened last week, 153,000 in sales, huge boost. This slide is very popular with sales teams. Everybody loves to see how they did the previous week, who the top customers were. It's a lot of good kind of competitive pressure and dynamic inside companies. So every week we summarize who the top 10 customers were during the previous week, but then also put that in context. So how well they've done so far this year and how well they've done over the last 12 months. An example Jim gave earlier was about that $500 invoice that was in danger of being lost and written off. And this is an example of how we help you and you can help clients discover those. So instead of providing AR as a overdue or outstanding AR as an aging statement, we're starting to prioritize it based on the impact to the business. So we look at things like how long has it been overdue? How much is overdue? How many invoices are overdue? And we'll suggest in a different order which way a company might want to pursue these collections, again, based on that larger impact to their business or maybe the risk that they won't get paid. We also send this out, and we're looking at a PDF of the email now, but we send this out in email form, and each of those company names would be hot linked. So if you are helping the client or if the client's doing all of their own collections, they can just click, say, Weber or Hansen and Sons, and it'll pre-populate an email with all the detail. They can quickly make a few edits and then send it to the client to help remind them for payment. So that's a weekly report. And then I'd like to get into the monthly, and from here we'll start to dive into kind of a lot more details and see where the data and the stories lead us. So again, when we look back a month, we start with this high-level summary of how the business has been doing. It looks like a great business, right? Sales were up 42% in September, over $3 million in the last 12 months. The sales in September were up 48% over the previous year. So, kind of up and to the right, all good news. In terms of collections, also looks pretty good. So 156,000 collected in the previous month. The DSO is 25. So we call it the Tally DSO, and you can read about this on our website, but we did a variation on traditional DSO that is closer to true DSO, but more accurate because it also handles multiple payments on an invoice. We found that with a lot of businesses, you don't issue the invoice and get one check later, but you might receive multiple checks over some time period. And we wanted to include that in the results. So a very accurate view of how quickly a company is able to convert those sales into cash. And again, sticking with that orders and cash theme, the first thing we want to show is how many sales a business is making, and then actually what that means in terms of cash. So a couple things pop out really quickly on this slide. First is maybe that big bump in August. So we see that there was a huge amount of cash collected in August. From what we can tell here, it probably looks like maybe sales, were high in May and some good sales in June and July, and maybe collections weren't so great, but they caught up in August. So hopefully whatever issue that was solved and addressed, and it's good to see the cash finally come back in. Another thing we see is the sales are a little lumpy. We're 165,000, then 373, then back under 2, but generally still healthy. And if you look at things like the number of invoices, it's also moving in a good direction, kind of growing up towards that, 150 on average range. For businesses who issue a lot of sales receipts, cash receipts, we'll also report that. It's not a big part of this company's business, but for those who take credit cards for some purchases and invoices for others, you can see them totaled together here. This is kind of simple, seeing sales and cash together, but it's something that most financial packages like QuickBooks don't really allow kind of quickly and easily. Often they require different reports to combine these two together over longer periods. In the weekly, we saw a breakdown between new and repeat customers, and we do that again here on the monthly. So now we're looking back again over 12 months with a comparison to the previous 12 months before that. And we can see how new and repeat sales have been trending. In this case, again, looks like pretty good news. There are new sales, there are new customers, kind of a typical high teen number every month of new customers coming in. Repeat customers has also been growing from under 100 to kind of over 100 the last 3 months. Looks like a good, healthy business so far. We look at sales by customer. Again, kind of echoing the weekly, get a quick view of who our top customers have been in the prior month. And then another way to view this is to look at concentration. So not just over that last month, but over a longer period, what kind of concentration does the business have? And one of the use cases Jim shared earlier, high concentration, and kind of the benchmark here is that your largest 5 customers shouldn't be over 25%, is kind of a rule of thumb that a lot of business, investment bankers and people who are offering financing and funding will look for as a trigger. Because if a business has concentration that's too high and they lose that customer, you can obviously have a quick impact on the company's financial positioning. And here's where we see maybe the first signs of some problems or areas of concern. So no one customer looks too big, but these top 5 are 26% of the last 12 months of revenue. And when we look at the last year, or not year, sorry, the last year, just the year to date, it's actually even higher, kind of 31%. So that kind of suggests that it's trending up. So the business might be becoming more concentrated, which is a little bit of a red flag, and something that just sharing this with the client might help them focus and be sure that they diversify their sales. We do a couple of summaries just of sales by different income accounts, sales by product, also quantity by product. Obviously, every business will be different, but keeping an eye on this and the trending helps to surface some issues. To save time, we'll kind of go through those really quickly. And now we transition into actually converting those sales to cash. This is a metric that we found not many people are familiar with. It's a little newer. People are most familiar with DSO, Days Sales Outstanding. Collection effectiveness was created by the Credit Research Foundation, and the reason we really like it is it's a good one to benchmark. So a DSO of 25, as we saw earlier, is fantastic for a business who sells on net 30. But if you sold on net 15, maybe 25 isn't so great, right? So CI is a nice metric because it just looks at essentially of the amount you should have collected that was due for payment, how much did you collect? So no matter what terms you offer, whether you offer one customer net 15, another customer 30, another net 45, you can help the business quickly see just how well they've done collecting what they should have collected. And as we noticed earlier with that big bump in August, we can see in this result that, yeah, June and July collections were way down. They only collected about 35% of what they should have. But they caught up in August, so we see a bump up to 94. The dotted line is a trend, so this is a huge swing, but overall their trend is fairly flat. So maybe that was a one-time issue, and it's something they keep an eye on it. This would be something that you and the business would track and see how that trend line continues over the next few months. We also want to summarize the receivables. So we give a high-level view of how many receivables are out there that are both current and overdue, what percent are overdue, and then again, back to cash, how many payments were collected on those invoices. And here we can see the same kind of the inverse of what we saw before, right? The percent overdue was really high in June and July, and then it dropped in August when the business caught up. And then the graphic just makes it really easy to see that change and quickly eyeball and notice if there are any problems that might need a little further investigation. And then we provide a number of AR KPIs too, so tally DSO. One thing we do, I think, is really helpful for a lot of businesses is we break it into individual buckets based on payment terms. So if a business has a DSO of 25, but they offer different people different payment terms, that maybe obscures some of the extra detail they would need to have. So if some are COD and some are 30 and some are 60, you can see how each of those performs. Great. Now let's go, we saw a little bit about the concentration. So now we'll go a little deeper into the data. Those slides were something that are generated every week, every month, a quick, easy way to keep your finger on the pulse of the business, to touch the client and share information. But we also produce what we call the customer sheet. This has every individual customer a business has and lots of detail about that customer. So for example, we see an individual account. If they're a subsidiary, we can see their parent, basic contact information. We get into when they were acquired. So when was the first sale to that account? This enables a lot of other analysis, things like retention analysis, cohort analysis. You can really get fairly detailed. How recently they engaged. LTV is their lifetime value. So how much has that business spent? How much has that customer spent with the business over their entire lifetime? And then we get into some extra details, number of invoices issued, sales over the trailing 12 months, how they rank, sales over previous years, and then individual payment performance for each customer. So for those clients of yours who are reviewing their customer base, and maybe they have a habitually problematic payers. And, it's kind of popular to talk about firing customers. Maybe they see a customer who has a low LTV and a lot of late payments. And at some point, you just wonder whether that relationship is really productive, and whether it makes sense to maintain it. And this is a quick way to start digging into that data. But to get into more detail, let's do a quick kind of additional analysis to dive in. So if you haven't used pivot tables before, they're a fantastic tool and I highly recommend. Recommend learning them. We'll do it now in Google Sheets, but the same functionality exists in basically every other spreadsheet. So we're going to create a pivot table on this entire set of data. And what we want to do is get a little bit better understanding of that repeat business that we're looking at. So one way to view that is to look at how many invoices each customer was issued. So as a row, we're going to look at number of invoices. So these are all the different invoice amounts that people were issued. Sorry, let me make sure I get that. All right, and for values, we're going to do the same thing. We're going to look at the number of invoices issued. And we can quickly get a sense of what our repeat business looks like. So we can see we have 618 customers. We're doing a sum here. Because it's only one each, we can do a count. We get a little more accurate. So we can see that we have 618 customers that were issued just one invoice. That's out of, if we scroll down to the bottom, out of 1,350 customers. 618 were only issued one invoice. That kind of raises some alarms depending on the business. That's not a really high repeat business count. We can also see this instead of count, we could see this as a percentage. We could, to easily dive in and view data in different ways. So you can choose the different options here. Let's get a sense too of the value of these different these customers at these different levels. So if we go in and we add LTV to this pivot table, now we get a quick sense of the value each of these represents. So on one hand, we look at this and we see of all of our 618 customers, the client's 618 customers that only had one invoice, total value of $550,000. That actually looks, that's a large number. So that looks pretty good. If we go down instead and we look at, say, the average, we get a completely different view. Now we see that those one invoice customers were an average $887 each. If we go further down, we see, once somebody gets into kind of the over 5 invoices range, the value is a lot higher, right? So now we're definitely north of $10,000 all the time. If we were to sum this up and do a little more work, we would see, I kind of computed some summaries in advance. If we looked at our first 5 customers, we'd see that in terms of numbers, these first 5 represent 82% of our customers. But if we look at their LTV and if we compare that to the total at the bottom, we'd see that they're about 34% of our value. So 82% of customers, you think about the 80-20 rule, this is the 80-20 rule in the opposite direction, where you have 80% of customers generating just 34% of the value. We could do another quick example. Let's go back to our sheet and we'll do another quick pivot table and then open for questions. So this one, let's say we want to look at that payment example. So instead of looking at number of invoices, let's start by looking at number of late payments. And similar to the first one, we'll count kind of the customers with late payments. Right, and we'll see that most of our customers actually paid on time. So 624 don't have any late payments. that's great. That shows that that's pretty positive. But we want to see the value actually associated with those late payments. So if we add now, let's add something like the sales for the trailing 12 months. And we can look at that by average. And now we can see, that we get the customers doing late payments tend to be people are paying their small bills on time, but those customers making late payments tend to be on the larger side. And we could keep digging into this more and more. I want to show you another quick example, which is one I produced in advance, which is a customer retention analysis. And this borrows a lot from the SaaS world and subscription metrics. And we see here is that in 2016, this business had 201 customers. First year of business, 201 new customers. The next year, they grew it to 803. Great. So they had 665 new ones. They retained 138 of their previous customers, losing 63. Not too bad. If we go to 2018, now we're really getting into some of the problems we saw with customer concentration, better understanding this business. So we see their customer count actually went down, right, from 803 to 762. Worse than that, new customers didn't grow as much, and the churn increased from 31% to 42%. So they ended up losing many of the customers from 2017 and 2016. And the trend, unfortunately, kind of continues in 2019. So we see 708 customers in 2019, 288 were new. We see churn go up to 75%. This is what we call customer churn or logo churn. We're just looking at the actual accounts, the end customer, and how they've either bought again or left. Another way to look at it is revenue churn. So a common metric is to look at revenue retention. And what we do here is we look at expansion revenue, which is basically of my existing customers, how much more did they buy from me? We look at downgraded revenue, which is of my existing customers, those who bought less, how much did I lose? And then we look at customers we just completely lost, churned revenue. And we get this metric called net revenue retention. And the first year we see it's 441,000. Not bad. The next year it's negative, and 2019 it's even more negative. Just as a benchmark, really good businesses retain well over 100% of their annual revenue year to year. So to see it not even being retained, being negative, is a huge red flag. This is not something you and I are going to solve for the business, but this is information that can be presented to the business for them to dig into the details and really try to understand what's happening. So we've kind of progressed pretty quickly from some of the high-level reports that we produce on a weekly and monthly basis to diving into the numbers and doing some custom analysis for a firm. And the needs will vary by your client. But you'll have the tools available to start digging into that. So just to kind of wrap things up, the goal here is really for you to help your clients. They win by getting actionable information with actual stories from their accounting data. They learn more about their customers. Again, we're very focused on orders and cash. So it's not financial reporting, it's not another balance sheet, but it's really helping them understand who their customers are, what they look like, their profiles, and how they perform. And to take this information, and then they can use it, once you provide it to them, they can use it internally to help their customers or to help their own strategies inform and modify their strategies. You win because you're boosting the perceived value of the services you offer. We think these can be great client acquisition and retention tools as well. So something you relatively inexpensively that you can provide clients to maintain a regular touch. And of course, it's all automated to save you a lot of time and effort. And with that, we'll send around the slide deck so you'll have the get started notes for later, and open it up to any questions.
All right, perfect. So there have been some questions that came in. I thought, well, we'll just leave them until after your demo. So what we've got here is, Dawn has asked, what options do you have for graphing the balance sheet?
for graphing the balance sheets. So none. So we don't, again, we're not focused on income statements or balance sheets, but we're focused on helping businesses, you and the client, better understand their customers, their sales success, and their exposure in terms of AR. So how much credit they've issued and how they're managing that collections process and bringing new cash into the business. So if there's the closest we get to financial statements would probably be the cash flow statement, because we're really helping the company grow and optimize incoming cash.
So then,
we're not doing business or balance sheet reporting.
right, and that's fine. So then just to confirm then to everybody out there that, yeah, Tally Street is very different. Oh, sorry, just a second here. Sorry, that's the office manager, Rosie, and she got excited because people came home. Anyway, so Tally Street is very different than some of the other tools, and this is one reason why I thought it was great to bring them in, because they are definitely part of financial advisory, but also different. So that way, again, you guys could think of, hey, this might be great for this client, whereas that might have been, you know, too big of a product for that client and maybe didn't solve all of their needs. So it's a little more targeted, which is really good. So again, it keeps it simple. That sound like a fair description, right?
Absolutely.
Okay, perfect. Okay, so then Allison has said, so does retained revenue relate to the nature of the product? So for example, of the quality, I may only need to buy a product every 5 years. So new customers would be the key to business growth.
Yeah, it's a great question. It will definitely vary based on the business and the product. In the example I gave, we looked at annual retention. So if it's something where people are buying on a you know, not a recurring monthly basis, but maybe once a year, a couple times a year, then annual retention might be the right metric. For a lot of subscription-based businesses, especially software subscriptions and others, you'll want to look at it on a monthly basis. And to your point about product, you also might want to look at it by individual products, different categories of products. But so we showed it at an annual kind of high level, which is a good place to start. And then you can drill down or back out as appropriate for the client.
All right, perfect. And then Mildred has asked, so she's thinking about this for a membership-based organization. So her question is, how can it be customized to accommodate membership categories?
So I guess I have a lot of questions to follow that up, but basically we will automatically, again, without any configuration, we'll automatically retrieve and learn from whatever's on the invoices. So I guess the short answer is that if the invoice has different types of memberships, then we'll be able to understand that and report on those different membership categories or types.
Okay. Okay, and that seems to be it.
Okay.
Really, yeah. So, and I mean, it's, you know, you've got a straightforward product, you know, and I've actually been working with them behind the scenes a little bit to make sure, because, you know, at first sales receipts weren't being necessarily pulled into the mix because, you know, it was focused on just the AR. So, you know, I've definitely been working with them behind the scenes to be able to get it where, you know, I've signed off. It's all, you know, all the numbers all match to exactly on mine. So that way it kind of covers all scenarios of the sales, not necessarily just the AR. So yeah, it's definitely great. But otherwise, yeah, it's pretty straightforward. So actually, Sean has asked about the pricing. So is the pricing customized, or is there a monthly fee per client?
Yeah, it's structured that there's we were talking about SaaS earlier during some of the analytics discussion, and that's how our service is also sold. So it's a monthly subscription. It's based on it's per company, not based on the number of people or the amount of revenue. It's just a flat fee per company. And yeah, it's standardized, and we have wholesale pricing and volume discounts available. So definitely encourage anyone who's interested in learning more to contact us, and we'd love to learn more about your practice and the kind of clients you have. And if everything looks like a great fit, then we'd love to help you get started, and look forward to additional feedback and helping you help your client.
Perfect. Okay, so doesn't look like there's any more. Oh, there's very interesting tool. Thanks for the demo. That's just a comment from Allison. So that's great. Okay, perfect. So that looks like it, and we're at time anyway. So thank you very much. Jason says thanks so much as well.
Great.
So that's great. Yeah. So again, just if you can get me the email within a couple of hours of, again, just whatever you'd like me to copy and paste that into the Zoom, and that's great. Mildred, who is she's the one who had actually asked about, I think, membership base. She says she finds it great and would love to try it with her clients.
Absolutely, yeah, and thanks. Just really quick, thanks everybody for listening. We are relatively new, and we're doing things a little differently. So thanks for taking the time to learn a little bit more, and we look forward to working with anyone who would like to try it.
Perfect, sounds great. And then all their contact information will be within the email that comes out to you. Absolutely. And then I guess we will speak to you, Jim and Brian, on Wednesday then.
Very good.
Great.
Perfect.
Thank you.
Thanks so much, everybody. Have a great day.
All right. Thank you.
Okay. Thanks, guys. Bye.